Financial statement analysis, as the name suggests, you are going to analyze the financial statements. Okay, so if you recap, what are the financial statements that you have learned so far? 1 is income statement, 2 is balance sheet. What are some of the items that you will find in your income statement? 1 is your sales revenue, sales returns, net sales revenue, cost of sales, gross profit, add other income, less expenses, etc. Okay, then in your balance sheet is actually basically your accounting equation. A equals to liability plus equity. Okay, so these are the things that you can analyze from your income statement and balance sheet. Okay, so everything, all the accounts that I have listed are all that you can analyze. Now that you have understand that you can analyze anything from your income statement and balance sheet, now you need to understand what is the purpose of you analyzing all those accounts or those two financial statements. Okay, so 1 is to compare with previous year's performance. Compare previous year's performance. And then secondly is to compare with your competitors. And then you will ask, like, why do I want to compare with my previous performance, or why should I compare with my competitors? The reason is because of decision making. So if you recall when you started learning POA, you will know that you have to analyze, you have to know your business well in order for you to do decision making. Okay, so then who are the people who wants to make decision for your business? And then I hope you remember what are stakeholders, or who are the stakeholders. Okay, so stakeholders consist of internal and external. Okay, so internal stakeholders, let's recall. Internal stakeholders are people like the owner or the employee. And then external stakeholders are people like shareholders, banks, creditors, investors are same as shareholders, customers, the public, etc. Okay, so now you have understood what you can analyze, which is your income statement and balance sheet, and you have also understood why you should analyze, because of decision making by the stakeholders. And then now the most important thing is to understand how to analyze. So first of all, how you can analyze is to compare, because you already understand that you have to compare with your previous year's records or compare with your competitors, right? So everything in this topic you have to compare. Okay, but what to compare? First is to compare numbers, which is also known as absolute figures. Okay, so this is the easiest way out actually to compare numbers, because numbers is always given. Okay, you will calculate everything and then you will do your income statement balance sheet, and then those are numbers already, so you don't have to do anything. But the second step, you have to compare percentages. Means you have to express the numbers into percentages, okay, which is more troublesome because you have to key in some formulas and then you will compare from there onwards. Even though absolute figures comparison seems like the easiest way out, but it has its limited usage. Because if you just compare number with numbers, you don't have a basis of comparison. Like if I tell you that your POA papers, you have paper 1 and paper 2. 1 is out of 40 marks, 1 is out of 60 marks. You don't know how well you do well until you times 100%. You times 100 to find out the percentage, right? So that's why in this topic you will learn different types of formulas to express the numbers in your income statement to percentages.